We've all been talking. Before you came, I talked to Judy, I talked to Paul, and we're all talking about the fact that 2012 doesn't look quite rosy. You guys are affirming that. But what are you seeing as the major risks to South African economic growth for 2012? We cited two things: politics and the economics of it, but particularly the economic situation.
Yeah, we describe the South African economy, or maybe the world economy in 2012, as the 4x4 economy, because we're going to be in low range and we're going to go through thick sand, we're going to go through a lot of obstacles. So there will be a lot of shocks to the market, a lot of volatility in the market. But in terms of the economics, the major problem is the deleveraging that you're seeing all across the globe, and hence the pressure that places on consumption expenditure. Consumption expenditure in South Africa has been fueled by government's participation in that, and that's been an increasing share of the total expenditure. And that is problematic because that growth just can't continue.
Yeah, the interesting thing for me is that we're talking about slower growth for next year, and yet we've got a government that's talking about 802 billion rand infrastructure program rollout. Where is that money going, and why is that money not enough to kickstart the economy, create the jobs that we need to support the spending that we're saying is slowing down from the consumer?
Well, on the one hand, the government's a little bit unlucky because some of the expenditure that they have budgeted is just not getting spent on ground level. And in fact, on certain instances, they are as much as 25% behind on spending on their budgeted numbers. But on the other hand, they're also a bit unlucky because the global economic scenario has cooled down dramatically, and that makes it kind of tough for them to get things going on ground level.
Yeah, how big a knock coming out of Europe and the US as well as our friends in China?
Well, the European situation obviously is enormously important because that is South Africa and Africa's largest trading partner. And the European Union and the Eurozone is still the largest contributor to global GDP, so we can't just ignore them. However, they're not going to sink into the sea. A resolution will be found. If we just pull our minds back, the problems that Europe is facing today is probably smaller than the problems they faced in 1942.
Yeah.
And that got resolved eventually. I think today's solutions is probably better than that. So a solution will be found in Europe. So although we see that that will import some risks and unevenness and slow growth into our economy, we think that maybe the markets are overestimating some of those risks and overpricing some of those risk factors.
They are forgetting that the Germans and the French cannot afford to see the Italians and the Spanish and the Greeks and all the other guys sinking in.
Absolutely, they all tied together. And I heard you talking earlier on about the gold price. And I must tell you that I believe that the gold price, the commodity, has become this warm little fuzzy gathering place for everybody who's a conspiracy theorist, who believes the dollar is going down the drain, who believes that the euro area is going to sink into the sea, and believes that we're going to get a ton of inflation. And unfortunately, I don't think we're going to see any of those three. So I think those gold bulls are in for disappointment.
Final word. Focus for 2012.
Forecast for 2012 is that the equity markets will probably perform better than what the current dark clouds suggest.